Welcome to the world of sustainable and socially responsible investing, a rapidly growing sector with the promise of not only financial returns, but also making a positive impact. This is an arena where your money does more than just work for you. It works for the world, contributing towards a more sustainable future. Imagine a world where your investments not only drive financial growth, but also promote social justice, environmental conservation, and corporate governance. That's the power of sustainable and socially responsible investing. It's more than just a trend, it's a revolution that's transforming the investment landscape $1 at a time. In the last decade alone, we've seen a significant surge in sustainable investments, with trillions of dollars now flowing into this sector. Gone are the days when investors had to choose between their conscience and their wallet. Today, you can have both. And that's what we're here to explore. Over the course of this video, we'll delve into what sustainable and socially responsible investing really means. We'll unpack the principles that underpin it, such as environmental, social, and governance criteria, also known as ESG. We'll explore why investing in sustainable and socially responsible companies is not just a good thing to do, but a smart thing to do. We'll walk you through how to identify these companies, how to invest in them, and what challenges you might face along the way. And finally, we'll look at where this sector is headed and why it's an exciting time to be a part of this journey. This isn't just about making money, it's about making a difference. It's about aligning your financial goals with your values and being a part of the solution rather than the problem. So if you're ready to take the plunge and make your money matter, then you're in the right place. Stay tuned as we dive deeper into the realm of sustainable and socially responsible investing. Let's kick things off by understanding what sustainable and socially responsible investing is. Sustainable and socially responsible investing, often abbreviated as SRI, is an investment strategy that considers not only financial returns, but also environmental, social, and governance factors. Picture it as a way of investing that aims to generate not just monetary profits, but also positive societal impacts. At the heart of SRI are three key principles, collectively known as ESG criteria. E stands for environmental aspects, which assess how a company's operations affect our natural world. This might involve its carbon footprint or how it manages waste. S stands for social factors, which gauge a company's relationships with its employees, suppliers, customers, and the communities where it operates. This could encompass everything from labor practices to data protection. Lastly, G stands for governance, reflecting how a company is run. This includes board diversity, executive compensation, and business ethics. Now you might be asking, why should I care? Well, the benefits of SRI are twofold. For investors, there's the potential for competitive returns. Increasingly, companies with strong ESG performance are showing resilience in volatile markets. But the benefits extend beyond your wallet. By choosing to invest sustainably, you're voting with your dollars for a more equitable and environmentally friendly world. You're supporting companies that treat their workers fairly, protect our planet, and operate with integrity. This doesn't mean you're sacrificing profits for principles. On the contrary, many studies suggest that companies with robust ESG practices often outperform their less sustainable counterparts in the long run. So, you're not just doing good, you're also doing well. With knowledge of what sustainable and socially responsible investing is, it's time to explore why it's worth considering. The question arises, why should one invest in sustainable and socially responsible companies? It's simple, really. Sustainable investments are no longer a niche market, but a growing global trend with the potential for competitive returns. Recent studies suggest that companies with strong environmental, social, and governance practices may perform better than those without. They show resilience in times of financial downturns, offering a degree of protection to investors. Furthermore, investing in sustainable companies can help mitigate risks associated with unethical or unsustainable business practices. Companies that disregard environmental standards, for instance, could face hefty fines or reputational damage, impacting their profitability and your investment. On the other hand, those committed to sustainable practices are often better positioned to adapt to regulatory changes, manage operational risks, and capitalize on new market opportunities. But it's more than just about the returns and risk mitigation. Investing in sustainable companies is also about aligning your financial decisions with your personal values. It's about contributing to positive social and environmental change. When you invest in a company, you're not just buying a piece of their future profits, you're supporting their mission, their practices, and their impact on the world. By choosing sustainable investments, you're voting with your dollars for a more responsible business world. Take, for example, a company that's committed to reducing its carbon footprint. By investing in that company, you're helping to finance their green initiatives, their research into renewable energy, their efforts to create a more sustainable supply chain. You're part of their journey towards a lower carbon economy, towards a more sustainable future. Or consider a company that prioritizes fair labor practices and diversity in their workforce. Your investment supports their commitment to equal opportunity, to fair wages, to a workplace where everyone is valued and respected. You're contributing to a more equitable society, to a world where everyone has a fair shot at success. In the end, sustainable investing is about making money and making a difference. It's about growing your wealth while also contributing to a better world. So why choose sustainable investments? Because they offer the potential for financial returns, risk mitigation, and the chance to align your investments with your values. Now that we know why it's beneficial, let's understand how to identify these companies. Identifying sustainable and socially responsible companies is crucial to making the right investments. So, how do we pinpoint these companies? The first step is understanding environmental, social, and governance, or ESG criteria. These are the markers we use to evaluate a company's sustainability and ethical impact. Environmental factors consider how a corporation interacts with nature. Are they minimizing their carbon footprint? What about their waste management and water usage? These are just a few questions we might ask. Next, we have social factors. This looks at the company's relationships. How do they treat their employees? Do they promote diversity and inclusion? Are they considerate of the local communities and so forth? Then there's governance. This pertains to a company's leadership, executive pay, audits, internal controls, and shareholder rights. Are they transparent and accountable? Now, armed with an understanding of ESG criteria, we need the tools to research. There are many online platforms and databases that rate and compare companies based on their ESG performance. These can be very useful in identifying potential investments. But be wary, not all that glitters is gold. Some companies might appear to be sustainable and socially responsible on the surface, but upon closer inspection, it's just a facade. This is known as greenwashing. So, how do we spot it? Look for consistency. If a company's actions don't match their claims, that's a red flag. Also, pay attention to the details. Do they have specific, measurable goals, or are they just using vague, flowery language? Another tip is to check for third-party verification. Companies that are serious about sustainability will often have their claims validated by an independent party. And finally, remember this: sustainable investing isn't just about doing good. It can also be good for your wallet. Many studies suggest that companies with strong ESG performance also perform well financially. So it's a win-win. Armed with the right tools and knowledge, let's explore the ways to invest in these companies. There are numerous ways to invest in sustainable and socially responsible companies, and we're here to guide you. When it comes to eco-conscious investing, you've got a wealth of options. One of the most accessible routes is through SRI mutual funds. These funds are made up of a diverse collection of companies that meet rigorous environmental, social, and governance criteria. You might also consider ETFs, or exchange-traded funds, which are similar to mutual funds but can be traded like individual stocks. Speaking of stocks, you can always choose to invest directly in companies that align with your sustainable values. From renewable energy firms to ethical fashion brands, the possibilities are vast and varied. But how do you incorporate these options into your existing portfolio? It's about balance. You might allocate a portion of your portfolio to SRI, gradually increasing your stake as you become more comfortable with the strategy. Investment is not without its challenges. Let's delve into some considerations. While sustainable investing is promising, it comes with its set of challenges and considerations. One of the hurdles you might face is a limited number of investment options. Not all sectors and industries have companies that meet the stringent ESG criteria, which might limit your scope for diversification. Another challenge could be higher fees. Sustainable investments often require extensive research and monitoring, which can lead to higher management fees. But remember, investing isn't a one-size-fits-all game. Balancing sustainable and socially responsible investing with your other investment goals and risk tolerance is key. It's about finding a suitable blend of investments that align with your values, deliver competitive returns, and fit your risk appetite. It might take a bit of trial and error, and perhaps some professional advice, but it's a journey worth embarking on. With the challenges out of the way, let's look at what the future holds for sustainable investing. The future of sustainable and socially responsible investing looks bright and promising. As we hurtle towards this brave new world, we see a horizon filled with opportunities and potential for change. Let's talk about growth projections. The sustainable investing market is expected to grow exponentially in the coming years. In fact, some experts predict that by the year 2030, more than half of all global investments could be sustainably invested. That's a monumental shift, and it's happening right before our eyes. And what's driving this growth? Well, it's a combination of factors. We have increasing regulatory support, a growing awareness of sustainability issues, and importantly, a rising demand from investors who want their money to do more than just earn a return. They want their investments to make a positive impact on the world. Now let's touch on some emerging trends. One exciting development is the rise of impact investing. This is a more targeted approach where investors actively seek out companies that are not only sustainable, but also have a clear and measurable positive impact on society or the environment. We're also seeing more innovation in financial products, with new sustainable funds and green bonds coming to market regularly. And finally, technology is playing a pivotal role in the growth of sustainable investing. With the help of digital platforms and advanced analytics, investors can now assess a company's sustainability performance with unprecedented precision. This is making it easier for people to make informed decisions and align their investments with their values. But, as with any investment, it's essential to stay informed. The landscape of sustainable investing is dynamic and ever-changing. So, make it a habit to keep up with the latest news, trends, and developments. That way you can make the most of the opportunities that come your way and navigate any challenges with confidence. As we wrap up, let's summarize the key points from our discussion. Sustainable investing is more than a trend. It's a powerful force that's reshaping the financial landscape. It offers competitive returns, mitigates risks, and allows us to contribute to a more sustainable future. And with the right knowledge and tools, anyone can become a part of this exciting movement. So here's to a future where investing is not just about making money, but making a difference. We've come a long way in understanding sustainable and socially responsible investing. We've learned that it's about more than just returns. It's about investing in a future we'd all like to see. A future where companies thrive by doing good, where our investment dollars contribute to positive social and environmental change. We've discussed the principles of sustainable and socially responsible investing and the benefits it brings to not only investors but also society as a whole. We've looked at how to identify the right companies, the various investment options available, and the potential challenges that come with this approach. Remember, aligning your investments with your personal values is not only possible, but can also be a rewarding strategy. Investing in sustainable and socially responsible companies allows you to contribute to a more sustainable future while potentially enjoying competitive returns. Thank you for joining us on this journey. Remember, your investment can make a difference. Until next time, stay informed and invest responsibly.